Good morning, one and all. I hope you are well and I hope you had a great weekend. I am back with another video, and today I have three pairs on watch, and those are Euro Pound, Aussie Kiwi, and Pound Swiss. So I'm going to start off with Euro Pound, which I think is my favorite of the bunch based on multiple variables, which I shall break down in this video. Okay, not always the easiest pair to trade Euro Pound because it can be a bit choppy, but you have to kind of read through the lines on this one. So Euro Pound, why am I looking at this? Well, you can see here, I'm just going to start from the daily, as I said, just to try and keep these videos a little bit shorter. But we have this volume was built here. We tap into that area by way of this reversal structure. Normally, the second touch of the structure kind of fails to meet the second touch. Okay, but again, you've got all these wicks here, so sometimes you have to kind of read through the lines. You can see that the wicks kind of the body kind of missed the start of this structure here. So this is where you have to cut through a lot of the wicks. But we have this reversal structure. We then tank to the downside. We have this sharp move up here. Okay. And then we have this consolidation here. Okay. Now, what I'm seeing this potentially, what's going on here, as I'm seeing this as a potential, try that again. I'm seeing this as a potential move up to complete this structure, okay, to give us this kind of parallel structure there to tap into this exchange of volume, which caused a big runoff last time around. You can see we smashed through this low. So that gives me a clue that there's potentially a lot of liquidity up here, okay, and that's being indicated to some extent potentially by way of this structure that seems to be forming. We also have this 1, 2, 3, and you can see that last week's daily close, okay, it was a strong daily close. We wicked. I am mindful of the fact that we kind of wicked to this area and not necessarily through it. We did wick slightly below it. Okay, but it's a solid push up. Price went down, it grabbed loads of liquidity and then pushed up. Yes, we have a load of near misses here to this low, which could potentially be taken out at some stage. But I'm kind of seeing this at the moment as a push up to there to take out that liquidity, and then a push down to take out all of these lows and this low, which these lows keep near missing too. Okay, so we kind of have this confirmed 1, 2, 3 touch structure. Now we have confirmation by way of this candle here, and you can see a near miss there to that high. That's a positive as well. And we can see we've had the push up. We've now got the consolidation. If we just measure this as well. So I'm measuring this impulse correction continuation. The third leg tends to be of a similar leg to the first, and that completes around this area as well. So that makes sense contextually. Solid 4-hour push up. And now you can see this consolidation here. I'm just seeing this, but if you look at these wicks, right, usually we would look at this and say, this seems a little bit too much of a pullback early on in the run. But if you look when these wicks actually occurred, if we just drop down to the 15-minute, these wicks occurred during swap hours, okay? And that one was literally just after swap hours when the spread was likely calming down. And if we just switch to the line chart, you can't see those wicks. So that has given me a clue that this is all just volatility, okay? And so if that's just volatility, and for example, we were going to put our, it doesn't kind of make sense. This makes more sense structurally, okay? So if we have the low there, that is more proportionate. That is more what I would anticipate for that impulse correction continuation to push higher. I like the fact that we're consolidating above here, negating the possibility that this could be a potential bear flag like that to push lower, okay, to take out these lows which keep near missing to that other low. So we've consolidated above this, kind of negating that. So with all of that in mind, what I'll be looking for, okay, I'm just seeing this at the moment as just a bit of a price forming this kind of middle section to then push down into that area, okay? So with all of that in mind, what I'll be looking for is, we just take that off. So I'll be looking for this correction. It's kind of shaping up now, just looking for a little bit more of a push down within this overall correction there, just looking for a bit more of a push down, and then I will set an entry on the break, and I will also be looking for the risk entry within the flag. Okay, and then I will look to get long, and my first target, you can see just the first inflection point is kind of there. We would have something in the region of 2% to work with by that target. Next target, 3.5 up to there, about 5%, and then I would be targeting this high here for around 7% to complete that structural move that I was talking about. Okay, and I would use the mechanical management tool. I would measure from this range to there, and I would set a take profit at the 90% mark, where price can typically pull back a bit more sharply, and that would give us something in the region of 6% to work with. So nice nice looking trade there. So I'm just going to monitor this just to see what happens with this flag. Okay, and that is euro pound. So that's what I'm going to be looking for from that pair. So Aussie Kiwi, I did take that off the chart, but it's come back for some reason. So Aussie Kiwi, right? You can see that we've tapped into this high here, and we did so by way of this 1, 2, 3 touch structure. We pushed down. Okay, we have a series of near misses above price and a series of near misses below price. If we just look at this, we've had a solid impulse up. We broke below here, where there was a sharp move. We get the buyers trapped in too early. It comes down, washes them out. Then the move starts. And this was quite impulsive. And you can see where price started to correct here. So at this moment in time, I'm seeing this as a potential until something changes, because we've had the solid push down from this area of value. I'm seeing this as this potential bear flag to do something like that, to take us up to these highs and potentially that high there, which these highs keep near missing too. Okay, so we could potentially capitalize on a move down to here. In the meantime, you can see price. I'm not surprised that price has consolidated sideways for a period of time, because we had that bearish daily close, but there was a big wick below it. And this, to me, just looks like this is just consolidation. When you get these middle sections here like this, which have a lot of volume in it, as opposed to something more like that, okay? When you have a middle section which doesn't have much volume versus something where you have something more like this, those are more likely to sort of break to the upside, okay? Because volume is being built within that middle section, and when it breaks out of that, that causes price to move to the upside. So I'm kind of seeing this at this moment in time as a bit of an M style pattern. We have that sharp move here when we have this much volume, and there's not really, here's the key point as well, there's not really any scoops. Normally we're looking for scoops between the touches. Okay, that's a good indication of whether price is ready to sell off. Previously I was looking at this as my area of value. I didn't manage to get an entry here for a multiple of reasons, but when we don't really have much of a scoop relative to the overall structure between the touches, that gives me a clue that we're likely breaking to the upside to tap into an area like this and then react, which would give us, we would then have that kind of scoop there. So with all of that in mind, what are we looking for from this pair today? I'm not sure how likely this is to shape up, but I will be looking for a tap into this sharp move here. The sharpness often indicates how much liquidity was there. I'll be looking for a 1 hour impulse down below the area of interest, so there, and then either a 2-touch 5-minute continuation or a 2-touch 15-minute continuation, and then I would look to get short with a reduced risk entry on the break, or as I say here, a risk entry within the flag. And I think that would be very deliberate then, because we would have tapped into there, washed out all the liquidity that was at that sharp hook point. We would have retested the back end of all of this, which is a separate structure to all of this. And the reason it's a separate structure or separate consolidation is because this move here was the move that washed out the liquidity at that previous high. So therefore, this is a separate piece of structure. We would be retesting the back end of that. Okay, we would, and then if we push down below here, this is not the sort of trade that tags you in, tags you out, and then just does something like that. That's not typical. All of these things can happen, but if it's not typical, if I've been doing this for several years and I draw on the possibilities and one of them just doesn't look like it makes sense to me, that's probably because it's not blueprinted in my mind. And if it's not blueprinted in my mind, then either I haven't put in the work, which I have, I can assure you of that, or it's just not a typical structure. So that's what I'm going to be looking for. And then what I would do, once again, is I would use the mechanical management tool, and I would measure from there to there, measure 90% of the range, and then I would have something in the region of just a short trade, just 5% to work with, which is kind of my minimum. And that is what I'm going to be looking for on Aussie Kiwi. So I have an alert set at that area of value to see if we can tap it. And that's what I'm going to be looking for from that pair. So last up, pound Swiss. Pound Swiss is already looking like it may not provide an entry, but we shall see. This is a higher risk position. So these other two positions were lower risk, which means I'm situationally always in a position to take them. Pound Swiss, I will not be placing a trade on unless one of the other two entries or one of the other pairs that I have in my other watch lists. Okay, I've got alerts on them. I've just put these ones on because I think they're the most likely to shape up with an entry by the end of the day. But another low risk position would have to put me in profit by 2% for the month before I was able to place a trade on pound Swiss, because I'm break even for this month because none of my entries have shaped up once again. So therefore, unless I'm in profit by 2% for the month, I don't take higher risk positions such as this pound Swiss entry, which I'm going to break down for you now. So pound Swiss, we kind of have, we have this move up, and then we have a near miss to here. Okay, let's just tidy that up a bit. We have a near miss to this high, which will likely, this high will likely be taken out because we near miss to it, especially if we've moved up with momentum. And you can see there was a sharp sell off here. There was a chance that we could see some kind of reaction from here. But when we have an area of value sat just above, often price will respond to these areas as it did here, not commit, and then push up to take out the high that it near missed to. Okay, which is what it appears to be doing. And if we just analyze this, one of the reasons this is higher risk is because if you just look at this candle close, yes, we've kind of, so we have the near miss there to that low, and we do take out that. Okay, but we do look at this daily close. It's very bearish. And when we have a big wick below it and we have a low, so we have a low beneath the bearish wick, that going off, that makes this more likely that this will come down to fill this, to take out this low, which this low near missed to, before we see that push to the upside to complete this 1, 2. Okay, so I'll probably have to say that again because I've noticed that when alerts go off during my videos, it cuts out my vocals for some reason. It cuts out the microphone. So typical Monday morning alerts just going off everywhere. So that makes this slightly higher risk if I'm looking for a trade in this area here. You can see we wick below, but as I say, we have that low just below it. And if we just zoom in, but we have had the 4-hour push up, but we've moved up. This is the big clue for me. Okay, we've moved up correctively, so it wasn't one solid impulse. It's moved up quite correctively. So what I would want to see in this instance is I would want to see a 1-hour flag. Okay, I would want to see a break above here. We haven't broken above it. We're kind of correcting through it at the minute. I'd want to see a 1-hour, a break above and a 1-hour flag here, where I could, separate the correction from all of this. Okay, and then I would look to get long on the break, and I'll be able to manage it, or within the flag, and I'll be able to manage it up to here for the for something in the region of 1.5 to 2%. And my target in this instance would be, as I've said on that arrow there, my target would be here, because that would be 90% of the range from here to here. Okay, so when there's a sharp move like this, sharp move up, sharp move down, just before the 90% area, I set my take profit at the 90% area and not actually at this high rather than actually at the 90% area, okay? Because that is often where price will react from, as opposed to getting all the way to the 90% area, if that makes sense. But what it's looking like at this moment in time is it's actually looking like price, because we've moved up correctively and not in one solid impulse. I wouldn't be surprised if this does something like this, okay? Pushes down to that low, which we near missed to, then pushes up, and then we would have something like this, which would make sense given what's happening across the board. So that is pound Swiss. I hope you've enjoyed this video, folks. I shall. I'm going to set a Google Calendar reminder to remind me to check this, just because we're kind of in the area now. So setting an alert doesn't really make sense. I'm just going to set a Google Calendar reminder to check this every couple of hours, just to see what it's looking like. And if I place any trades, I will update you accordingly. Have a great day, folks, and I'll see you again in the next video.